Professional Corporations by Katherine Jackson. Professional corporations, also known as professional service associations, were formed to allow professional persons such as doctors, lawyers, dentists, accountants, etc., tax advantages to offset the liability they take on to complete their services. This presentation will go into detail of what professional corporations are, the advantages and disadvantages of having this type of corporation, early laws and taxes pertaining to professional corporations. What is a professional corporation? It is a corporate form available to entrepreneurs who provide professional services, such as doctors, lawyers, accountants, consultants, and architects. It was set up to allow professionals retirement benefit tax breaks not given to other business entities. First laws of professional corporations were intended to give professionals some tax advantages enjoyed by corporations. These tax advantages include retirement plan tax benefits. Also, professional corporations are not allowed the benefit of limited liability. The retirement plan tax benefits included annual additions to defined contribution plans, which was $45,475, meaning professionals can contribute for $45,475 annually to their retirement plan. Annual benefits, meaning once the professional was eligible to retire, they would receive at retirement age from defined benefit plans $136,425 a year. Personal responsibility is a key factor in being a professional, so the law can't allow them to escape liabilities for their own actions by incorporating. Tax Equity and Fiscal Responsibility Act, also known as TEFRA. It enacted provisions to professional retirement and pension plans. Annual addition to defined contribution plans was reduced. Annual benefits from defined benefit plans also were reduced. TEFRA came about because in early 1982, Senator Robert Dole, the chairman of the Finance Committee, was making public statements about the fact that wealthy professionals were able to put away large sums of tax-deductible money into their retirement plans. He was so adamant about it that it got the attention of the Ways and Means Committee, which took it to the Senate Finance Committee. As a result, the Treasury staff and the staffs of the Joint Committee and the Finance Committee put together a pension reform package to be included in TEFRA. The amount professionals were allowed to contribute to defined contribution plans, meaning what they could contribute per year to their retirement, was reduced from $45,475 to $30,000 a year. This amount is also tax deductible. Once the professional retires or reaches retirement age, the annual amount that they are allowed to receive from their defined benefits plan was reduced from $136,425 to $90,000. What are the advantages of a professional corporation? Professionals that practice in a group having a professional corporation protects them against personal liability from negligence of a partner. This means that if a partner in your professional corporation is accused of malpractice, this will not affect the entire business. Each professional takes responsibility for their own liability. Another advantage is They can create retirement plans and 401k plans for their employees. Professional corporation retirement plans for employees have higher contribution limits than non-incorporated companies can have. They can provide health and life insurance as a tax-free benefit to their employees. Also, professional corporations have perpetual existence. Perpetual existence means that the professional corporation can continue to operate without interruption if the shareholder or employee dies. In a sole proprietorship and partnerships, they legally dissolve if an owner dies or leaves the company. What are some disadvantages of professional corporation? If a professional corporation with a solo member not protected from liability or malpractice as an LLC or general business corporation is. The cost of filing a corporate tax return are higher. Also, a disadvantage is the potential for double taxation. If the professional corporation reports any business income, they will be taxed at a flat rate. The business owners / shareholders will also have to report their income from the business on their personal taxes. Professional corporation taxes. Most professional corporations qualify as personal service corporations, also known as PSC, for federal tax purposes. IRS rules the professional corporation tax. To be a professional corporation, they must pass 2 federal tests. 1, the function test. 2, the ownership test. The function test requires that 95% of business activities of a professional corporation involve services within specific occupations in fields of health, law, engineering, accounting, consulting, or performing arts. The ownership test requires substantially all of the professional corporation's outstanding stock be held directly or indirectly by qualifying people. These qualifying people are employees currently performing professional service for the corporation, or retired employees who worked for the professional corporation prior to retirement, or the heirs of the partners in a professional corporation. Also, if the professional corporation doesn't qualify as a PSC, then they're treated as a general partnership for federal tax purposes. Professional corporations are also taxed at a flat corporate rate of 35%. A professional corporation files a corporate tax return. It issues Form K-1 to all shareholder employees. Form K-1 shows each individual shares of corporation's profit or loss. Any income retained in a PSC are subject to corporate tax rate. But a PSC is likely to pay out all business income in the form of salaries, bonuses, and fringe benefits. Therefore, their corporate taxable income is usually zero. Salaries paid to employees are considered tax-deductible business expenses for the professional corporation. Also, shareholder employees still have to pay personal income taxes on their income from the PSC. As I stated earlier, this is where double taxation can come into play if, by any chance, the PSC actually had income, corporate income for the year. In conclusion, the question is the designation of professional corporation worth it anymore? The answer might be no in most cases. After the Tax Equity and Fiscal Responsibility Act, TEFRA, and more recent provisions to the taxation of professional corporations, most businesses are choosing the designation of an LLP, limited liability practice, or LLC, limited liability corporation, because they are being covered for their limited liability. Any professional organization wanting to start a business will just have to weigh the pros and cons to figure out the best path that is best for them professionally.